Hey everybody, Dennis Wilburn, Active Trend Trader. This week's market is a little bit squishy, having a hard time getting traction from last week's rally. Welcome to On the Radar. Stay tuned to the end because I'm going to be reviewing 4 great stocks that are setting up for potential trades prior to the end of the year, or at least going into the first part of the year. And then also the 3 indexes, see what they have in store. But before we go into that, I want you to remember, look up into the, let me point the right way, not the other way, up in the right-hand corner. I'll be showing you how you can save 25% on our best AutoPilot Trading pre-flight checklist that we put out every week. You get 7 trade setups, 3 ETFs, and then also 4 stocks. And so it's something you want to take a look at. Encourage you, take a look. Just check it out. 25% savings through the 4th of January. Let's go ahead and jump into today's session. My objective, of course, is during the week to basically cover each one of the indexes midweek, see what's going on with the indexes and see, and as you can see, let's start here with the S&P. S&P started rallying last week. This was Monday of last week. It rallied straight up 4 days, and then we are 3 days through this week. We had a really nice breakout on Monday of this week, but what's been happening? Just a straight across the line consolidation. Now, some technicians believe that this is a strong pattern when it basically does not pull back in a bull flag type pattern towards the moving average, but it just drives straight across. We'll see if that holds water. The one thing, we have not lost any of the volume. It's still remaining below average. The momentum indicators have crossed back up to the upside. And the longer-term market forecast is also crossed up to the upside. So we'll have to consider this a breakout. Look for pullbacks into the moving averages or the breakout level on the S&P. What else are we looking at? Let me jump over here. What about the NASDAQ? NASDAQ was a little bit wonky today in that we did break out last Friday of last week down this downline, broke to the upside. Now we're kind of doing a little bit of a pullback. All the momentum indicators are indicating we want to go to the upside. Even the weekly are starting to turn back around like we want to go up to the upside. So we'll keep that in mind, that is the direction that we will probably go in. So there we go. That we're probably going to continue going this way, but we may get a little bit deeper pullback before we do. Could we roll over totally from here? I don't think we're going to, but project into the midsection of this pattern here, which that coincides with a 50% retracement on the Fibonacci. So what am I looking for on the Qs? Yeah, pull back into probably about the 20-day moving average or maybe the 34. I would say 393 to 392 for a pullback, and then wait for a signal to trigger back to the upside, and that would be a great place to jump in. Let's just throw a fib on this real quick, guys. Let's throw a Fibonacci on this just to see how deep we need to get. So if we went from the high-low, I'm just looking right now at a 50% retracement to there. And as I said, puts us about 391. So I would say anywhere between the 391 and up here at the 394. That's the number we gave you earlier. Excellent. IWM, Russell also looking, Russell's looking kind of, pretty good. We basically broke out the momentum indicators are continuing to move up to the upside. Of concern over the last few days, well, yeah, volume's kind of dried up, to be expected with a holiday shortened session or a holiday period like we're having over the last 2 weeks. So look for a pullback back in again. 220 or so makes sense. Again, you can throw a Fibonacci on this. Where is it likely to go? And again, what are we looking for? We're looking for a pullback into the 38 to the 618 retracement, that magic fib box. The midsection of that is 217. Of course, we did make a lower low today on a daily basis only. And so anytime you break the high of a low day, that could send us off on a new upside move. So we'll be watching that going forward. So that's it for the indexes. Again, longer term, this looks very healthy. Longer term, one thing I'll be looking for is we continue to get, as you're aware, the CDC reduced the quarantine time from 10 days to 5 days. I have a sense that what we'll see going into this election, as we get closer into an election year, which 2022 will be, it would not surprise me to see the states and the state governments that have been very overbearing because election is coming up and they're wanting to protect themselves, that they will start lightening up on the COVID restrictions, and that they will start allowing people to have a little bit of freedom again. And so that in itself could stimulate the economy, get it up, get it going again. So just stand by for that. So what about the stocks that we have today? I'm really pleased with the stocks. Now, some of these we've been watching for a while, and I'll just go over here. INMD made some great money on this stock earlier in the year. And what's it doing? We've come down, we've hit a low that got down into the past lows over here. Always look to your left. And what do you see? Look to your left. And as you see, we got back into a consolidation area where buyers came in previously. So again, buyers came in. Are they going to continue to push us up? Don't know. But at the same time, this looks very promising in that we had on that low and then a lower low, we had a positive divergence on the TSI, positive divergence on the market forecast, and now we're primed to the upside. So let's see if we pull back. Are we going to drop down a little bit lower and then bounce? So this low right here, just like when we came off the top, this low will be predictive of what transpires next. If we do get a TSI crossover to the downside, just stand by and wait. Right now, we're just getting what we call a bullish squeeze. That's one. Next stock. This one looks also pretty darn good. And again, these are off of our AutoPilot Trading running list. We've made some great money earlier in the years on these running up through here. Now it's basically they've sold off. They're back down into a consolidation period. Excellent bullish hammer on a weekly chart. And the weekly market momentum indicators look like they're getting to the area where it should bounce. We've already bounced on a weekly basis. I would like to see us bounce a little bit more in the market forecast. Volume staying low. So we are basically hit our low, bounced up, retesting this low towards this low, and are we going to bounce up and head out from there? I would say that LV is a buy anywhere from about 54 down to this low here, and that low would be about, let me give you a number on that, it's about 5% away, so you may want to let it get a little bit lower so that you're never risking more than 5% on the trade. So I like that. If we did take a trade here, I would exit it if I drop today's low. But I may also say, hey, I'll buy it at, let's say 52.60, 52.65, somewhere around there. And then the stop loss from there would be less than 4%. Go about a dime to 15 cents below that swing low there. RVLV. Okay. Next stock. This one again has been an excellent winner for us, and we'll see if it continues to be so. This is an excellent type of move. We came down, we hit a low on top of past demand. Prices took back off. Now they broke out or got back up into this resistance area. Now we're doing a pullback. This pullback will be telltale. In other words, what it will do is it will show us how much further down are we going to withdraw and then bounce. You can take the Fibonacci off of here, remove that fib, and let's draw another fib in here to see, okay, where's it likely to go? And believe it or not, this, need a fib up here. A fib. There we go. And those of you who do, in fact, watch us, Mike, I'm going to be doing a live webinar coming up next week, or not next week, in the month of January, and with the Mara Wealth about how to utilize Fibonacci retracements. And so our Fibonacci retracement here is 126.72, lower side of that down here about 124.43. So anywhere in that fib box is where we could get a reversal. Again, watch for what's going to happen with the TSI. If the TSI breaks down, we could expect a move, a little bit deeper down into this. But look what's happening here. We have a bullish signal on the market forecast, the green line. The two shorter term momentums are all the way back down into the lower reversal zone. So we have a two-line cluster. Two-line clusters, what do we expect from a two-line cluster? We expect a reversal signal to the upside within 1 to 4 trading periods. So just count them out. May not happen this week, but we're getting close on it. And it would be nice to put into your portfolio going into next year some really great winners. And I think Blackstone will be a good winner for us going into next year. Again, from a technical standpoint, looks pretty darn good. We're pulling back all the way into the midsection of that bullish engulfing on the weekly chart. And so watch it from there. And so, hey, just as a reminder, up in the upper right-hand corner, there will be an informational tab that you can just click on that. It will take you to the special that we're doing, 25% off. But also I want to remind you, if you're not a subscriber to us on YouTube, hit the subscribe button, hit the bell to be reminded. Please leave comments. Let's get some dialogue going about what's going on in the market. And so before we get into the last stock of the day, which we are now ready to get into, and here is the last stock. This stock has been high on the Investor Business Daily watch list for quite some time, both the IBD 50 and several others. We traded this early in the year, did well in it as we're moving up through this area here. And it has just done basically a pullback into a level of support, or pullback to the breakout area, moving back up. Okay, downside, it's rolling over a little bit before hitting the upper high here. At the same time, though, it would not be surprising to see us pull all the way back down to somewhere between the 34 and the 50-day moving average, and then rebound from there. Why do I say that? And this is a tip to take with you. When you look at a stock, look back to see which of the moving averages are supporting. Here we see it's the 8. Here we see it's the 8. Then once the 8 is broken, the 20 is broken, then we look for a next level mark on the moving averages way that supports us, the 50. We broke below it, but the 50 wound up supporting it. 50 wound up supporting it. So we know we're getting the strongest support level off of the 50, and everything is now, again, pointed in the up direction. So where would I be looking for it to pull? Probably somewhere down between I like the 34 to the 50, but what I would do as a pre-warning, go ahead and put in an alert, and I'm going to show you exactly where to put it, right in between the 20 and the 34 at approximately 143. I put it in at 143.50. 143.50. And if we took let's say we can buy it about that level there, the 142.49 level. And where would that put our stop loss? Well, that would put our, if we put it in, buy it about that level there, and put a stop loss below that level, well, that's about down too far. That's 8%. That swing low is about 6.3%. So we'd want to put a stop loss just slightly below the 50-day moving average, or we wait and buy it wholesale when the price action is in between the 34 and the 50. So, hey, thanks for joining us today. We'll finish up with today's session. That That was 15 minutes worth, and so I'm really pleased that we made it got through in 15 minutes. And again, I hope you had a great Christmas. We'll be back in Hawaii and back to our normal schedule the first week in January. We return to Hawaii on the 4th of January, so that weekend we'll be back to normal, and then again. So aloha, God bless everybody.